Over a recent 5-year period, the S&P 500 more than doubled, gaining 108% over that time span. That's a pretty good return. Of that 108%, what percentage of the companies do you think contributed half of those gains? You would think it'd be 250, which would be half of them contributing half of the gains. Not even close. The answer is less than 5%. 22 companies. If you take that further, so 22 companies accounted for 50% of the gains, and only 100 companies accounted for a whopping 75% of the total gains. So those bottom 400 companies in the S&P 500 didn't do so well. To take another look at it, in the 2 years ending June 30th, 2020, 6 companies accounted for 56% of the return in the S&P 500. It's the FANG plus Microsoft. Not a surprise to anybody that they're the biggest contributors, but probably everybody is a little surprised that they accounted for 56% of the return. In a recent JP Morgan Asset Management publication, they published the distribution of returns for the Russell 3000 from 1980 to 2014. In that time frame, 40% of all Russell 3000 stock components lost at least 70% of their value and never recovered. Effectively, all of the index's overall returns came from 7% of its components. So, what's all this mean? Many people are strong advocates of passive index funds. We are not at Radar Investing, and these numbers help explain why. Most people will say if you add more companies, the theory is that you're diversifying and spreading your risk. What you're really doing is you're diversifying into losing companies. So we prefer to identify the top performing companies on an individual basis and invest in them directly. And the Investblaze product offers this compelling value proposition. With this data and with these decisions, we provide the focus metrics to select the top performing stocks that are most likely to continue to outperform the market, providing higher returns with less volatility. Now that statement is the holy grail of investing, and we're not claiming to tell you which stocks or provide any kind of portfolio that will do that for you. What we are giving you is the tool in the Investblaze product that will give you the data and provide the data and the analytics in order for you to build your ideal portfolio. And you'll be a much smarter person doing it that way, and you'll see a much better return. And you'll feel much better about understanding everything that you have in your portfolio. All of that goes into you won't panic and sell at the inopportune times, which is what many individual investors do. And you'll have confidence in and watch the progression of your portfolio and the growth of it. So that in a nutshell is the Radar Investing way.